Investors Chronicle.
Hello and a very warm welcome to Lee and the IC. I'm Alex Newman, an associate editor at the Investors Chronicle, and once again here in the FT studios with Lord Lee of Trafford. John, how have you been?
Fine, thank you. Fine.
As ever, we're going to be discussing the latest movements in John's portfolio and the market, but for most of this podcast, we will be speaking with the head of one of the public companies John is invested in, or more specifically, has recently invested in. That company is Braemar. The London headquartered shipbroker, and its chief executive, James Gundy, is, I'm very happy to say, with us here today. James, thanks so much for joining us.
My pleasure. Thank you.
Before we get talking, I just need to start with the usual disclaimer that everything we talk about on this podcast is for the purposes of education and entertainment. None of it should be taken as financial advice or recommendation to buy or sell shares. James, can I start with you? Let's start big picture. For those listeners out there who may not have heard of Braemar or even be very familiar with shipbroking, can I just ask you to briefly outline what the business does, who are your customers, what problems are you trying to solve for them? What's the breakdown of your various services?
Well, for those who don't really understand shipbroking, we're a middleman from what we would call an oil company or a big trading house to whatever, or buying and selling ships. We're taking zero risk. There's no risk as far as we're concerned. But Braemar is in probably multiple markets, anything you can imagine, from shipping from either containers to tankers to bulk carriers to even car carriers, everything we're involved in as a markets. And we have multiple offices around the world, from 18, because shipping, as you can imagine, is a global trade. So it's important for us to be globally everywhere. The commission is based on normally based on the 1% on the price of a ship. Imagine the price of ships go up in value. It obviously helps the revenue for the business. And of course, as freight rates increase and in buoyant markets and shipping capacity shrinking, so it creates more supply and demand. Invariably, we're between 1.25% and 2.5% on the commission, depending on how large a ship is, for example.
Okay. And this is a relationship business. This is repeat business. You're working with clients all around the world.
I mean, I have clients going back for 35 years and still today speak to on a daily basis. And you see that, the company evolved from there's their children come into the business, etc. And so you've always been around. So very much relationship driven. I like to say, a shipbroker, it's not a case of just waiting for the phone to answer, to be taking the order to do a deal. A lot of time we're actually creating the deal. On top of that, I'd like to say that we're also involved in commercially resolving problems. Many times I've had to resolve a problem which very easily we could go to pass on to the lawyers. So we great pleasure in closing those deals out before the lawyers get involved. I've been involved in high courts, mediations, arbitrations, etc. So there's a lot of knowledge regarding that as well. So we're not just a broker that just does the middle part of the deal. We're actually involved in many aspects of the trade.
And so for listeners to get a picture of your finances from a sales perspective, what's the breakdown then between sort of chartering and your other advisory businesses? What's coming in? What is the biggest proportion of revenues?
For me, it's about whenever one sector moves up and down. For example, like dry cargo, 2 years ago was exceptionally strong, then came off, and tankers was weaker, went back up. S&P suddenly closed down a lot during COVID, for example, but then we started doing a lot more in the new building situation. So you're trying to make the business slightly more immune to be able to...
S&P, James, is...
Sell and purchase.
Right.
So you're trying to make the business slightly more immune to any one market making a big key difference to the sector. So I think for anyone listening, shipping is cyclical. I think we're all aware of that. The freight rates move up and down. But if you grow the business and you're in all those different sectors, it's very rarely that all the sectors fall at the same time or rise at the same time. It's easier to revenue budget and then run the cost of business.
Notwithstanding that diversification within the business, I mean, every business, every sector has sort of lead indicators that tend to be positive or negative in the aggregate. I mean, what are yours? Should we be looking to interest rates, global container rates? What were the kind of moving parts?
I think the moving parts, I say sadly sometimes because obviously we're in a world environment that has a lot of political issues.
Mm-hmm.
And I don't want to sit here and say that sometimes we profiteer on the back of these atrocities, but it does happen sometimes. So like seeing last year with the Panama closing because of the drought, Red Sea closing because of political problems, We've seen that those are key factors. Obviously, Ukraine, Russia was a key factor on the tanker market. But the difference between now and why I'm so positive about the next 5 years outlook, it's hard to give more than 5 years in shipping, but where we've seen the difference between 2008, which is the last boom in shipping on the back of the what was happening within China, it's different now. We saw some 20% of shipbuilding capacity cut after 2008, which obviously means less ships being built, and we're seeing an aging fleet. So for me, and one other key factor was predominantly, you'd say in 2008 was dry cargo and tankers, bit of offshore, etc. We've seen such a diversified shipbuilding involvement recently in the last 2 or 3 years, predominantly containers, tankers, LNG, hugely on LNG. It hasn't allowed one single sector to overbuild. So theoretically, we look at some of these main sectors like dry cargo and tankers, and those fleets are sort of moving to sort of some high percentage, 20% of over 20, coming to 20 years of age. Now, back in the day, you would say 15 years and older was starting to become a ship that start to go towards what we call being recycled, moved on. Those ships are lengthening because of the market being strong, but there has to come a time when these ships become a point where they have to go. And without the additional new buildings coming into the market, you could see how the market looks poised, and the market looks like a very contango base going forward on where we see rates and prices.
And premiums emerging for certain assets and vessels.
Yeah, so we've seen a lot of high premiums.
Yeah.
And the fact is, it's hard now to get ships delivering much before mid-27, second half 27, and some of the bigger ships moving towards 28. Wow. So it's a positive sector, and throwing in all the situations of going in current affairs, it doesn't feel like things can. It looks positive in that respect.
Asking a question about, I suppose, the listed space. In the UK, we only have 2 listed names in your sector, and you spent 10 years at your
Clarksons,
career at the other listed company. You know it well. I mean, how do you compare to Clarksons in terms of sort of scale, culture, and strategy?
I think you're never going to hear me say a negative word on Clarksons because they trained me to where I am today. So I've got a great affection for the company where they are, and I think they've done exceptionally well in where they are. The only difference is as you grow in size, you start to lose that feeling of part of a company. I'm not saying you become a number in a bigger company, but you start to feel less involved. And the brokers within our company like to be involved hugely in the business of helping to run the business. And I very, very much push the factor from where I want these junior young brokers to move up and continually evolve. I moved throughout many sectors to where I am today. And that isn't just I'm a chief executive and still broking today as well, but I've moved from chartering to S&P to new buildings to long-term, And I want people to do the same, and I think that's easier under someone like ourselves, as opposed to when one of the reasons why probably I left Clarksons was because I was told that was my sector, and to go outside that sector that was somebody else's domain, and you can't do that. And ACM gave me that ability to grow, and so I have to encourage that because I believe in that.
John, to bring you in, as you previously said on this podcast, you were invested in Clarksons, and this year you came aboard Braemar. I mean, I suppose putting aside for a moment the question of valuation, which I'd maybe like to save for a little bit later, what's it about this sector historically that you like? I mean, and also, how did you come to consider Braemar as an investment recently?
Well, as far as shipping itself is concerned, what I hadn't realised was that shipping actually is a growth industry. I don't think a lot of people realise that. I think they almost think it's sort of yesterday's industry or yesterday's sector in a way, and it has to be about airlines. And the reality is that shipbuilding is growing. And from an investment point of view, I certainly saw this with Clarksons. I was in very early in Clarksons, did very well. I should have held my shares for a lot longer. Thankfully, I kept my daughter's shares in Clarksons, and it's been a sort of 10-bagger or even more. It's been a huge success, and so I was always conscious of the sector. I was conscious of Braemar years ago. I think for a short time I was a shareholder, and then they've had a number of problems as a company, and then more recently I formed the view that those problems were behind, and Braemar was under relatively new management and was talking optimistically about the future. And I saw a very substantial valuations gap between Clarksons, which quite rightly, because of its record, is valued highly, and Braemar, which has been coming out of a more difficult period, hopefully into sunnier uplands, or calmer waters. Maybe that would be more appropriate. Actually looked to me undervalued, and looks to me, as of today, increasingly undervalued.
Yeah. I think you said at the time of the AGM, or maybe we spoke briefly after Braemar's AGM, which I think you attended this year, you were kind of drawn to James's M&A ambitions. I mean, buying other companies doesn't always work. I mean, what gives you confidence in Braemar's ambition on this front? And
Well, I think the big thing for me is the fact that James himself has got quite a significant shareholding in the business, and to me, it's absolutely crucial to see a chief executive with a good holding and adding to that holding, which James has been doing. So that is important. Attending the AGM, as I did this year, there was a feeling of confidence across the board, and in the discussions I had in the margins of the AGM, I like the dividend yield of 5.5%, and it seems to me that Braemar does tick a number of boxes, and all being well, will grow, and also, like a lot of small companies, frankly, I think it is undervalued as far as I can tell. And thus, obviously, always vulnerable to some sort of predatory interest. And as a service company, broking business, relatively light on capital demands, Braemar, obviously would be attractive to a predator. The negative there would be that obviously it's very much a people's business, as it were. And if a deal were to be done, it obviously would need the support of the Braemar personnel.
James, I won't get you to comment on who the predators are, because I've asked CEOs that question a number of times over the years to know what the answer is. But on the other side of the coin, I mean, you have made it quite well known that you're keen on bolt-ons and acquisitions, and that has been a theme throughout the last 18 months as well. I mean, shipbroking, as you said, it's a relationships business, it's a people's business. How do you price this kind of intangibles accurately? Because you're presumably hoping to win business by bringing people over.
I think that you have to remember. I think you take your experience,
Mm-hmm.
and I think I can say I've had experience in trying to set up desks or offices around the globe, and sometimes a satellite office with 2 or 3 people, you can't manage it, and they feel not as loved because they're not part of the bigger group, and sometimes they become the easy pickings from the competitors who are locally to draw them out of that situation. So you look back then, I just sort of wind the clock back a bit to when I came in, which was in January 21. And, I had a very clear vision. I mean, I'd obviously been frustrated with what past was going on within Braemar, and I didn't necessarily understand the full story myself. So if I don't understand the story they're trying to sell, how's that supposed to get sold to the investors? So for me, it was about reducing the debt. And I'd seen some acquisitions done beforehand that hadn't necessarily worked out, which had sort of created debt on the business. So I acquired this debt, came in. The job for me was to sell the non-core business I don't understand. If I can't be really hands-on and that's not making me a control freak, but at least understanding these businesses, why am I involved in these businesses? I'm not going to go and this makes sense to me. So we sold those non-core businesses, reduced the debt, allows us to get back in a position of strength to go to look for. Then we look at our holes within the business and see how we can add value to our business. Now, to me, 1 + 1 has to make 3. And we have to think we can buy a business and how we can enhance that business and how we can grow that business under the Braemar flag. So the acquisitions we've done, which was debt, we built those. We've enhanced those business by 20% of revenue and allowed them to break into new markets they weren't in, and we've actually grown those businesses even further. So those are great add-ons, and you can see from our results and where we are in our figures for buying this business, we're back to where we are again. So now, and there's been other deals where I've seen that I've walked away from, and because you feel it's the wrong time to buy this business because it's at the time of the cycle that makes sense, and also I'm very careful on the fact that as it's a people's business, and you've mentioned that several times. Sadly, for the people that have owned those businesses and have been there for many years and they're wanting to sort of exit, I know I'm buying the business from them exiting, but the most important thing is to keep this succession, because if I pay them to go out the door and the succession walks out at the same time, what have I bought? Nothing. So it's very important that, and sometimes I've had to walk away because there was not enough spreading of the consideration within the business. So I think there's some things in the pipeline for us. I can assure you of that. It allows us as a bigger company to be able to do those acquisitions, being a public company. I think the last 3 or 4 years, I think John probably asked this question as well, that it hasn't been easy as far as from the love from the city, as far as the stock exchange, because it's been redemptions. So we've done deals without going to the market, but we've seen since we've recently changed our broker to Canaccord, and we've had a great feedback from all the institutions. We've had a big institution buy into the business. So at the moment, it feels like we're in the right place to do some things coming down the line now.
Sort of two-part question. I'm going to ask the first part to you, James, and then John, kind of get your thoughts on tying to something we talked about before. I was looking at the breakdown of your geographical revenue. The majority is UK based. Can you just help me understand that? Is that because London, UK, is a hub for shipping finance, and that actually that is involving a lot of deals where legal entities are based here, or is it UK bound and outbound chartering?
I think a bit of both, really. I mean, there's obviously a lot of clientele within the London markets. But at the same time, those London-based clients have satellite offices around the world as well, which we have to service locally as well. London has just become the hub of all the various sectors. I mean, we might have an office in Houston. Houston might just do tankers and specialized tankers, whereas in London it's anything from the security business to finance to dry cargo to tankers to LPG, LNG. It just so happens to that. Sometimes we open these overseas offices because somebody wants you to go back home from wherever they lived, and we open an office to build around that. But it just feels like London is the hub, and we're a UK stock-listed company, so it's bound to be the hub.
You can now get 12 weeks of an Investors Chronicle print and digital subscription for just £12. You'll get instant access to our website and our app, plus the magazine delivered to your door every week. Check the terms and conditions in the show notes for more information.
And I mean, John, we've, in some ways, this is a common theme with the kind of company that you've invested in, that, they have a UK sort of heritage, but there is always that capacity for global growth, that even though you invest only in UK shares, you're not looking to limit it to almost a UK domestic economy story. There's always has to be not always, but often there is an international component.
Yes, people sometimes can't understand, why I just buy UK stocks, as it were. There's a thing from investing overseas, in Far East, where growth possibilities are greater, so they say, or America. And my answer is that the majority, not every share, but the majority of businesses where I've got shares do actually trade globally. So I think I get the advantage of UK corporate governance and our pretty high standards here, and yet the businesses are trading globally, and I'm assuming that those like James running the businesses that I'm in as chief executives, that they recognise where the greater growth is, as it were, and therefore, they will develop in those areas and site their regional offices in those areas of greater growth. So it seems to me that I'm winning both ways.
In your industry and the sort of line of work specifically, Is it a case of sort of like you're a volatility play in some ways, that volatility is good for the global shipbroking industry because things are out of sync, then that just gives you more kind of latitude. How does that opportunity look like?
Any kind of movements in the markets, it's good for us. Whether just for example, when we had the invasion of Ukraine, our tanker freight futures desk, which is one of the biggest in the markets, had a record day by going up, markets going up, and then the dry cargo market was coming off because Ukraine was a big exporter of grain. That was coming down. But they also had a record day at the same time. So we play both markets. So they're both having record days, but on different movements of the market. The most important thing is we'll be able to offset. A lot of these deals we're doing there's a lot of risk management involved in the business now, so that it has to be risk managed. So those trading desks are also helping the physical desk move, and also at the same time on the purchase of ships as well.
So, I mean, you've got the sort of supply and the demand element of trade. You've also got to navigate lots of rules and the geopolitical complexity there. So, in October, the FT reported that Braemar had brokered transactions in which entities it knew to be ultimately controlled by a sanctioned Russian oil producer had acquired crude tankers. I mean, I should state here that though these entities were subsidiaries, none of them were or have been sanctioned. I think you've made that clear. And there's no suggestion that Braemar has broken any rules or laws.
No, that was in the FT article as well.
Yeah,
very clear.
I mean, you've said since that all due diligence on counterparties meets all the regulatory, legal, and compliance standards. I guess some investors and perhaps implied in the volatility in the shares that followed would want to know are your processes up to scratch, and how do you show that they are up to scratch?
Okay, how do I answer that question? For me, shipbroking has evolved hugely in the last 20, 30 years. We've moved into, shipbroking isn't regulated, but it's on the cusp of that, for example. We have regulated businesses in Braemar, and we're a PLC. For that comes with huge compliance and KYC rulings. And the guys in the team in our offices, they have a huge amount of power, and if there's any kind of trying to overrule some of that power, it has to get as high as myself and the chief operating officer Tris, and also Grant as well, the FD. So it gets to high level. So what we've seen in this situation, let's be clear, those three parties involved in that trade, no one is sanctioned as of today. Okay, what happened for us was that yes, we admitted we did 9 of those transactions. I think there's been some 350, 400 ships moved into the shadow fleet. But in the summer of 23, we just felt uncomfortable that where these ships were trading. So we pulled back and we ceased to trade that, politely sort of declined to those deals. You have to remember you're turning down revenue, which is obviously sometimes hard to turn down. The pressure comes on you, but we just felt that was the right thing.
You felt that was the right thing because you're anticipating.
Well, we just felt the departments are doing the right things. They're checking where the ships are moving towards, and for that reason, we move away. 6 months later, the government rulings came out even further, and they said, irrespective of the KYC clearing, because it's not, these companies can get KYC cleared. They move them around.
KYC is
know your client.
Know your client.
So they get the clearancing. And for that reason, once you've got your KYC cleared, that's okay to sign off. Now, remember, there's banks involved here, there's big owners involved here selling ships, and there's lawyers. So they're all involved in the but we moved away from those deals. But 6 months later, after that summer of 23, the government comes out and says, irrespective of know your client, even if it's cleared or not, if you knowingly believe the ship may be moving into shadow fleet, that's a breach of sanctions. So if anything, we were 6 months ahead of what we saw coming down the line. Now, what other people do, what they don't do is I know, but of course it's obviously getting very, very tight, and the government are doing the right thing, putting further, imposing further sanctions and restrictions on what we can and what we can't do. But so as far as Braemar's concerned, I think we've done everything. How that got to the FT is another conversation, but at the same time, the FT very clearly quoted in that article there was no sanctions breaching as of the time. So,
John, I mean, just to throw to you, I suppose, as a fellow shareholder, but a shareholder outside the company. I mean, the news did result in a sort of hit to Braemar's shares, clearly spot by a degree of uncertainty of what this meant in the sort of the immediate aftermath. I mean, just to put you on the spot slightly, what was what did you make of it all? Kind of the company's response.
One was concerned because whenever there's any sort of negative headline about a company that you're invested in that you weren't expecting, as it were, that there is some knock and some uncertainty, and that's normally reflected in the price. And I'm afraid that when you are investing in the public company sector, there are always left field events that are going to come along. And when the headline was that they had been involved in some sort of sanction situation, clearly there is concern. Is this going to be serious? Is it going to develop, as it were? So one waits for a comment from the company, and one endeavours to ask questions. And as far as I could gather, Braemar indicated that they hadn't committed any offence. And I think what James is telling us today is that as far as they're concerned, they acted pretty early in this situation, as it were, and not aware at the moment there's any legacy issue as far as you're concerned.
No,
James.
I think if you go back to what happened in 2023, rather than the suspension of the shares, I'm going to bring it up now as well, which goes back to 2006. I can assure you FRP came in and did the internal investigation on the back of what the auditors wanted. I personally asked for a thorough investigation to go into more detail over and above where BDO was, so that I can sit here and say that we now know that everything's okay and I don't have to look over my shoulders. So, yeah, I was very insistent on that because I can't go out talking about the business and I know there's something maybe in the closet I don't know about. So we've gone through the whole business. We did this, and as I say, this article, where it came from, disgruntled X whatever or competitor, whatever, it doesn't really matter. It's irrelevant to the conversation. But the fact is, it states very clearly, and there was no sanctions breaching, and we did nothing wrong. That's it.
I want to move on from this because I do want to get on to financials and a bit of talk about valuation. There's just one final point on this. I mean, the BBC separately reported that the government had opened 37 investigations into UK-linked businesses, including marine insurers, about Russian oil sanction situation. I mean, can your due diligence processes identify, for example, individuals or companies who would be facilitating this activity, or does that the point where it gets very, very hard, and you're having to make?
I think I think rightfully there we have to make some judgment. We have to call upon our knowledge of the business and who we're dealing with and where we believe what's going on. It's hard for us to police the industry. I mean, that's for other people necessary to do that. I mean, as I say, there's a lot of these transactions. There's banks involved. There's lawyers involved. There's buying and selling entities. So, we can only do what we can do, but because we are a public company, as I mentioned earlier, and where we state in the business industry, we're not a two-man shop sitting in somewhere in the Middle East doing transactions. That's not but you can't imagine that does not happen because it's bound to happen on buying and selling ships. But for us, no, we don't require that. So we do everything we possibly can, and that's why this is the positive on the business. I believe the business is going to move, is consolidating more and more because of this cost factor falling into the industry as far as like compliance and KYC departments and legal departments. Whereas before, going back in 20 years ago, a shipbroker didn't have to have these additional costs on their books. So that is there's a reason why we're able to feel we can acquire and grow our business, and as our trading partners are insisting on feeling they're more protected by a bigger company, a public company. That's where that plays into our hands slightly as well.
Regulation is a benefit for the bigger incumbents, I suppose.
And 100%. If you look at the way the IDB brokers have gone, they've obviously moved and consolidated. And I think that's pretty well seems where shipbroking will go to as well.
Let's get on to the financials. You just had your half year results. You're in a nice net cash position. Massive step up in statutory operating profit, and you've got a rising order book. I mean, what are your for the rest of the year and the year ahead? I suppose what are your big spending plans? can you improve the business's financial position anymore? I mean, clearly you're in a net cash position, so that's a nice thing to have. But are there things you would like to do to the balance sheet or otherwise?
I think that, and and by the way, it's a compliment having John involved in that business, and I respect his knowledge of the businesses out there. But for me, it's really, I guess, trying to understand or trying to explain to you where we were 4 years ago, where we are today. I think I've clarified that in here, and I think the most important thing is going forward. Braemar took the business over 8 million profit, and we're now circa 18, for example, as high as 20. It shows we're doing some things correct. To sit here and say, "Oh, we're going to be 30 million or 40 million in 2 years, 3 years' time," is a big thing, because I didn't think it'd be hard to say 4 years ago we'd be at 18 when the company's running that sort of realms for many, many years. But I think I've alluded to the fact that there's opportunities out there. I feel the business consolidating. So I feel, and that it seems like from our recent roadshow, that there's a lot of positive reactions from the various institutions who want to support things if we have some right ideas. Some smaller deals we will do ourselves, but there's a bigger deal out there which makes sense, then look at that. But at the moment, I feel as a management team, we've done 2 or 3 deals. They've proved enhancing. We've removed the debt, and we've obviously improved the profit. So, and a forward order book. I mean, it's interesting when I speak to some of the institutions who are watching, talking to us about things. I said, not many companies sort of start the year with a potential $87 million, $85 million of forward order, but they start with 0. They can start again. So a large chunk of that falls into the first year. So there's a good percentage that we feel confident allows us to budget and feel confident about where we are going forward.
John, I mean, the other thing in that the half years I spotted, which I know is something you're always looking for, is the dividend, which was up 0.5 pence, I think, to 4.5 pence. To sort of maybe just tie that into the valuation question, I mean, is that a nice kind of security to have that the dividend's moving up while you're waiting for this gap with the valuation with gap with Clarksons to close? I think at the moment, business in about 7.5 times forward earnings compared to maybe 14 or 15 for Clarksons. So there's a gap to close.
Considerably undervalued. I mean, yes, obviously one likes the dividend and an increasing dividend for what it is in cash terms. But what is more important is actually the message that a dividend and a dividend increase. I think it was it something like a 14% increase?
We've stated progressive dividend.
Yes,
we've made that very, very clear, which I think is fair. And I think that for those wanting to discuss about dividends or growth, we're very clear on both. I mean, I'm about growth, but of course, dividends is hugely important for our business.
But the increase in the dividend, which was announced, to me sends the message, because when a board is deciding on a dividend rate, it takes into account the results of the period that it's paying the dividend from. It's looking to the future, and no sensible company board wants to have to reduce a dividend from an increase, if you follow me. And also the message is that it's got the cash actually to pay the dividend, and the bottom line profit is not just an arithmetic profit, as it were. The actual cash is there. So to me, the combination of an increased dividend and the message that the dividend increase sends, is really quite important. And yes, it's clearly not the sole driver of one's interest in the shares, but it's an important piece on the overall jigsaw of a company that you're endeavouring to build up. So I mean, if I'm building a jigsaw on Braemar, for example, I'm putting in the overall valuation of it. I'm putting the dividend yield of 5.5%. I'm putting in broadly optimistic comments by the board in the annual report. I'm putting in the size of James's shareholding and the fact that he's increased it. So you put together all these pieces of the jigsaw, and hopefully, the jigsaw at the end, looks in a pretty good shape, and it all fits together. And if you see 1 or 2 gaps and 1 or 2 negatives, then it's not so attractive. But at the moment, from my point of view, pretty well all the pieces that are on the Braemar jigsaw, do look pretty positive, and I'm obviously hoping and expecting an increase in the valuation of Braemar over the next 2 or 3 years.
Just to round out the episode and continue the metaphor, John, maybe you could touch on some of your other jigsaw puzzles.
A mix of good news and bad news, I suppose. In that, good news, encouraging results from Anpario, who we had in to an earlier Lee in the IC, and also to Concurrent, particularly Concurrent Technologies, which really is now increasingly highly rated. So you have a certain sort of track record there to match.
Okay.
To match James.
More pressure.
Success. On the other hand, as I mentioned a little earlier, a big knock on Secure Trust because of the announcement decision by the Court of Appeal, which may or may not be overturned in the Supreme Court. But certainly, it's a big knock on the share price and the valuation. So the usual mix of news. My particular focus has been on the potential capital gains tax bill that I've got to pay through a combination of the very successful takeover of Lock and Store, the self-storage, safe storage business in earlier in the year. I think it was March or April. Which was very profitable from my point of view. I think it was my biggest takeover ever, and I've had about 60 takeovers over the years. And most of the holding was unfortunately outside my ISA, so it's subject to CGT. And then I think I indicated earlier in one of our podcasts that I'd sold my Nichols and my FW Thorpe that were outside the ISA, taking advantage of the then lower CGT percentage of 20%, rather than the certain increase in capital gains tax, which was going to come from the budget. So overall, big capital gains tax bill to meet January 26. So I've got to keep a fair amount of cash for that. So what I've done is to park the money, as it were, in a combination of Legal and General and Phoenix, and also Supermarket Income REIT, which is a new purchase of mine, with an average yield there of probably around 9.5%. But knowing that if I need to raise the cash in 12 months or so to pay the CGT, I can do it fairly easily from stocks like that. And also, of course, in the intervening period, one's getting quite a substantial flow of dividend income, which is obviously appreciated. And I made one or two other small purchases as well.
To return to a sort of familiar topic of takeovers, this week has brought bids for Direct Line and Loungers. I think the latter of which had put itself up for sale after feeling the market didn't recognise its value. Is that positive or a negative, that there's this lack of recognition of value?
From my point of view, it's a big positive. It means that one's buying pound notes for 50p, and it really is as simple as that. And I would say that's pretty well the situation with Braemar. Indeed, I think the chairman at the AGM said that in his view, the company's shares should be worth twice the present share price, or something similar. That was when they were a little bit higher. We've seen the bid for Direct Line from Aviva at a 60% premium to prevailing prices. I think the generally accepted view is that the UK stocks are cheap, and therefore, from my point of view, I'm happy to tuck them away at this sort of level and await events.
60% hard number to say no to, CEO?
No, I've got much higher aspirations than that.
Well done. That's always good.
That's the right answer.
That's always good to hear.
Okay, we'll finish there. So yeah, any questions you'd like to put for John for next time can be done by emailing me at alex.newman@ft.com. Until then, all that's left for me to do is to thank you for listening. A special thanks to James for taking the time to introduce Braemar and talk through the company today. Thank you, John, as ever, for your thoughts, and to thank our producer, Maddie Upthorpe, for all her work behind the mixing desk. Until next time.